YouTube, man, what's good with y'all boys, man? It's your boy ZC Trades, and I'm back with another one for y'all. And this is one that I've been owed y'all for a couple weeks, couple months maybe. But yeah, bro, how do you transition from CFDs to futures? Because I had to make this transition not too long ago, and it was really that time. Like, I feel like I'm a little bit early. Y'all might be a little bit early, but we not the earliest, you know what I mean? But you're not late either, you know what I'm saying? It's going to be time here soon in the US. Like, the US cracking down, they kicking down doors, bro. Medicoats is out of here. I feel like overseas got the best brokers. But over here, and don't get me wrong, like, I love CFDs. I love certain things about CFDs. That I really hate certain things about CFDs, bro. Cause like the leverage that you could get, dog. Like, come on. Like, it's YouTubers out here that had us all wanting to try to flip accounts, bro. Like, some of these dudes be like 100 to 10 bands, like in a month or in a week. Like that right there is crazy. Like, you shouldn't even be telling people that, because you making the world a worser place by telling people that. I'm not gonna lie to you. But yo, how do you transition from CFDs to futures? I want to give y'all a little background on me, right? I've been trading CFDs for the past 3 years. I never really had no problem with it, other than like brokers falling off, and recently prop firms falling off from CFDs, or medicals dipping on them. And another thing that I really had a problem with on CFDs, bro, was like the spread, dog. Like, if you go to a different prop firm, your spread gonna be a little different, and it's always fluctuating, bro. I'm not trying to be sitting here checking the spread before I take an entry, you know what I'm saying? And then, like, because either way I'm gonna still take the entry, you dig what I'm saying? But I gotta lower my risk and all of this other stuff because of spread, because of the broker. Really, your entry, your order is not even being executed into the real market. It's being executed into an overlay, a market maker, a fake market maker at that, you know what I'm saying? And they the ones who choosing the spread and switching the spread up like that, bro. So they just inconveniencing everybody. Like, bro, it was times when my stop loss would get hit, but it was never hit because of the spread. That right there, bro, I gotta take my jacket off. Hold on. I gotta take my jacket off, bro. Cause that right there, that'll ruin my day. I'll watch myself get stopped out of a trade, and then a trade play out, but it never actually hit my stop loss. It's just the spread. You know what I mean? So yeah, let's get into this, y'all. Let me see. This is my first time using this, so bear with me. Alright, bet. So the conflict of interest in CFDs. CFDs means contracts for difference, right? CFD brokers typically take the opposite side of trades as their clients. Now, if you go look up interviews on, like, I guess the people who own these CFDs, or like the brokers who own these CFDs, or like these market makers, they're always going to say that they're not. They're always going to say that they're not going to do that. Why? Because they're going to lose business, bro. Like, you got to think about it. 95% of traders are unprofitable. So honestly, if you take the other side of their trades, it's probably a profitable business. I would have to see it for myself. They claim that they don't do that. They claim that it's impossible for them to take the opposite side of everybody's trades. We're not saying that you take the opposite side of everybody's trades. We just saying that you take the opposite side of traders. You know what I'm saying? They're saying it's impossible to do that. No, bro. Like, we got AI nowadays. Like, and they been had AI. They just now coming out with it for the public. You know what I mean? So they don't send your orders to the actual market. Imagine thinking that you're entering into the market. Whole time you're entering into a simulated program conditioned to mimic the market. Now, my question would be, who's simulating the market? Because for me to not know who's simulating the market, I don't know if they have my best interest or not. You know what I mean? Odds are that they don't. This is a business. The top dogs in the industry don't trade an overlay. They orders is going straight to the market, bro. And that was a big thing to me, because, like, we say treat trading like a business. We want to be professionals out here. But if our orders is not going straight to the market, of course we can make money, but that's not professional. I'm looking at longevity. Like, I'm building a skill set that in 10 years, bro, oh my God, I'm gonna have built so much foundation. But in 20 though, if D-Marcus is here in 20 years, like, come on, man. I can't be trading a CFD in 20 years. I'm still not even trading the real market. I can't call myself a professional because I'm not doing everything professionally. The standardized platform meta quotes been kicking these brokers out left and right ruthlessly. My bad. Regulation is moving in, and it seems that the US ain't letting shit slide no more. They checking everybody. And honestly, bro, if you live in the US, it's just time to get on the right side. I feel like you're gonna have to move to futures eventually anyways. It's gonna get hard out here. We in like I wouldn't call it a revolution, but times are changing. You know what I'm saying? If you're a trader and you're in the industry of trading, bro, things are changing right now. If you're new here, you're not really missing out on much. but a little bit of experience. The platforms are completely different. The way you calculate your risk is completely different. I honestly feel like it's way more convenient to trade futures. Just stick to the program. Get with the program before the program kick in, you know what I mean? Because I have a feeling 95% of this industry is going to be trading. Well, I won't say 95% of this industry. I'll say most of us in the US are going to be trading futures. Why futures is a better adjustment, bro? The damn spreads on future, bro, you won't even know that there's a spread there. Typically, it's about 1 tick to 1 point. I believe it's 1 tick. I don't know. I honestly cannot tell you, but I can tell you it's less than 1 point, and you won't notice it. You put a limit in, or you put a market execution in, and you're in. Just like that, bro. It's ideal for scalpers. I'm a scalper. I'm in and out the market within an hour, maybe 2 hours. I don't want to be sitting here all day, bro. All I gotta do is I gotta put my limit in, or I press my market execution, set my stop loss, set my TP, manage the trade a little bit. But I can do all of that right on TradingView, bro. I'm gonna get into that as well. And like I said, how many times has spread took you out of a good trade on CFDs, bro? If that's ever happened to you, dog, you know exactly what I'm talking about. And that is just the most frustrating thing. I blew an account like that one time. I believe I was trading with, my Forex funds. I was funded with my Forex funds right before they shut down. Before I was actually funded, I was in the last step of passing the challenge. I believe I was about 1% away, and I spiraled out and I blew the challenge. Why? I close my phone, I open it back up, and I look at the trade, and it's running for my stop loss, but it don't get there. And yet it still takes me out of the trade. And that was the first time I ever experienced something like that. And I'm just like, I remember I was standing outside by my car and I was cussing crazy, like the Ring camera heard me. You know what I mean? I'm just like, what's going on right now? Like, and it just made me go back in there and take another trade. Cause I'm like, yo, that wasn't even fair. Like, that wasn't even cool. Like, that, it never happened to me before. It was the first time, and it caused me to spiral out. I got so emotional about that. It just didn't make sense to me, but it's because of the spread on CFDs. It's because of these market makers, and that right there, I don't like that. Not only that, but it's constantly fluctuating. The spread is constantly fluctuating according to the broker's will. They are your market maker. Futures is a better option because it's a regulated market. It's a centralized exchange, and it's where the big dogs trade in a professional way. You feel me? So it's easy to measure your risk to reward. Plus, the fees and commissions are highly predictable as well. Okay, I'm gonna show you guys how to measure your risk to reward as well. So, how I trade futures, I use Tradeovate. Now, mind you, I trade prop firms. Even if I didn't trade prop firms, I would still use Tradeovate. Right now, I'm using Top Step. I have the Tradeovate package, right? Now, Tradeovate is a dope platform. I haven't had any problems with Tradeovate. Actually, I had one problem, and I'll get into that as well. Tradeovate has its own platform for desktop, browser, and mobile app. I will say, bro, the mobile app for Tradeovate is kind of weak, in my opinion. Like, I refuse to take a trade on that mobile app, bro. It's just Tradeovate. Your mobile app is trash. Okay, I'm just gonna put it out there, but you can still execute on it flawlessly. But I just don't like the format. It's just a little confusing. I don't like it. Tradeovate will give you the option to automatically roll over your contract. We'll get into that in a minute. And you can trade right from TradingView, my guy. Right from TradingView, my G. Like, I feel like TradingView is the industry standard, right? It's all I've ever used ever since I came into this industry. And for me to be able to execute with zero spread right on TradingView, it feels like I'm back testing all the time, man. Like, I don't know if y'all ever paper traded on TradingView. It feels like I'm paper trading on TradingView. You know what I mean? Execute quicker than you could on MT4, MT5. You ever been on MT5 and you press like a market execution and that joint just loading? It's like loading and the chart's still moving and you just like, what the hurry up. Like, the shit moving. You know what I mean? And then it gets you in at a lower position, and then all of a sudden your risk is increased. Yeah, that's another thing I don't like about CFDs. You execute way quicker. It's instantly. They have super low fees, super low commissions, and it's free to open an account with Tradeovate, and you can also get a free paper trading account with Tradeovate as well. Now, with TradingView is the best charting platform out there, in my opinion. Now, these two are paired together because your Tradeovate will allow you to trade on TradingView. There is other platforms that will allow you to trade on TradingView, but I don't trade with them, so I'm not talking about them. I have always used TradingView without a problem. It's perfect for back testing. It has many markets with the ability to choose a broker per market. Now, what do I mean by that? Now, when I was trading CFDs, there's like a NASDAQ for Black Bull. There's a NASDAQ for Oanda. There's different brokers that have the same market, essentially, pretty much. I guess that's what I'm trying to say. I hope you understand what I'm trying to say, at least. Bro, sometimes I would be taking a trade on one of them, which would look accurate according to my MetaTrader, and bro, I would get stopped out on my MetaTrader, and on my trading view it didn't hit my stop loss, or vice versa. And that's a whole nother like irritating thing. It was just so confusing. And then it's like, okay, I go find the right broker on my trading view with the same market, and it's like, oh, okay, I did get stopped out. But on the other broker I didn't get stopped out. Why? Because it's an overlay, it's not the real market. And that shit right there bothers me for real. We're not even really trading the real market if we trading CFDs, bro. And it's a lot that comes with that. TradingView is self-explanatory and it's simplified for anybody to use. If you're new to trading, you can learn how to use TradingView within a week perfectly. Like, you can learn how to do everything that you need to do. It's just as easy to use on desktop as it is on the mobile app. I use TradingView, like, let's say like I'm in the middle of a trade, right? This happens to me all the time. I'll be in the middle of a trade and I'll be like, damn, I gotta go take a dookie. I'll grab my phone and I'll just go do what I gotta do, handle my business, and I'll just be watching my trade and managing my trade on my phone. It's that easy on TradingView. When you got TradingView paired with TraderVate, I can manage my trade from anywhere. You know what I mean? Now, I do like to trade from my desktop, but I don't really want to trade from my phone. But if I had to, I definitely could. TradingView just like that. They the top dog if you ask me. You customize your charts with a lot of indicators, a lot of different colorways. Your fibs, your tools, all of those are color customizable. I think that's super dope on their part, because I be looking at some people's charts and that joint just be hurting my eyes. It could be a naked chart, but the colorways that they got just be hurting my eyes, and it might not hurt their eyes. It may help them see price action better. You know what I mean? And that's important. That's very important. So customizable charts is very important. And your market data is only $7 a month on TradingView. Now I am going to get into that, and I'm going to show you guys how to get that market data. But what I will say is, while I'm trading with TopStep and I'm paired up with TraderVate, I get the market data for free with my TraderVate. With TopStep, you pay $50 a month for a 50K account until you pass it. Then you pay the activation fee, and then there's no fees after that. I guess within this $50 a month package, they're paying for my market data as well, and that's dope to me. Shout out TopStep, bro. They've been good to me. So here we are on TradingView. I just went online and I typed in CME Group Futures TradingView package, and this is what popped up. Now, they do have a few different packages. This one is for if you're in the US, like it says, non-professional traders only, but you will be you a professional trader, bro. Call yourself a professional trader. If you trade futures and you doing everything that you got to do to be profitable, call yourself a professional trader, my guy. All right, so you just click subscribe to the real-time CME groups. You gotta have an account. I'm not logged in, and yeah, it's $7 a month, bro. That's mad cheap. Like, you could trade metals, you could trade oil, you could trade the indices, bro. It's mad cheap. Like, $7 a month. We talking about 25 cents a day. Go ahead and get your CME Group Futures package, bro. That's a quarter a day. You can go find that in the couch. You know what I'm saying? So yeah, on to the next one. Now, this is super important. If you're looking to switch from CME CFDs to futures, this is super important right here. This is what I got caught up on. This is what made me take so long to switch, because I just didn't understand this until I had somebody break this down. So this is the simplest way that I could break this down, right? Because it is a risk management adjustment. A lot of times if you're trading a prop firm, you won't be able to risk the full 1% of your account, or you won't want to, at least. In CFD, price movement is called pips. In futures, pips are called points. Okay, I don't know if y'all ever listen to ICT. I don't know if we got ICT traders on this channel, but you ever hear him talk about 5 points will change your life? I never understood what he meant until I got into futures. Pips are points. Now, within 1 point, there are 4 ticks. And I'm gonna say that again backwards, just in case you don't understand. 4 ticks add up to 1 point. 1 point equals a pip. All right, 1 tick is the smallest price movement possible in the futures market. And instead of trading lots, we trade contracts. This was the biggest confusion for me. So let me go ahead and break this down. And for example, we'll just use the E-mini NASDAQ, E-mini YM, which is Mr. Jones, and we're gonna use the E-mini S&P. So 1 contract equals $20 per point. Now let me go ahead, I'm gonna show y'all this real quick, right? I lost my trade today, I was tight. But if I go in here, right, and we on NASDAQ, and this is the NASDAQ futures market. This green dot right here means that I'm getting real-time live data. And I say, all right, I'm gonna enter into the market right here. I'm gonna put my stop loss right here. This is how many points this is. 21 points and basically 3 ticks. All right. Now, my TP, 72 points and 2 ticks. Now what I would have to do is I would have to say, okay, 21, let's just round it up, right? 22 times 20, that would be 440, I believe. Okay, so if I were risking one contract, let's say this hit my stop loss, I would only lose 440 bucks, or I would just lose, I won't say only, I would lose 440 bucks. If my stop loss was like this, 10 points, then I would be losing 200 bucks. If my stop loss was like this, 5 points, and I was using one contract, that would only be risking 100 bucks. All right, so I'll get deeper into that later on in the video. Since it's $20 per point and there's 4 ticks in 1 point, it's just simple math. 1 tick is $5. If you're using one contract, you'll never see a price fluctuation be $4, $3, $2, $1. You'll never see that. It'll only be $5, $10, $15, $20. It'll only be like that. So E-mini Dow Jones, one contract is $5 per point. All right, and one contract also equals $1.25 per tick. I hope this is clicking with y'all. If this is not clicking with y'all, go ahead and just paper trade it. Just paper trade a futures market. Go back test it or something. It'll start to click very easily. I know it's a bitter transition at first. At least it was for me, but it will begin to click and you'll begin to love it. All right. And the E-mini S&P or ES, one contract is $50 per point. Yeah, so that thing moved 1 point. It's $50. Or one contract is $12.50 per tick. There's 4 ticks in 1 point. $12.50 times 4 is 50 bucks. It's simple math. It will, at first I had to like write all of this down. I had to bust out my calculator every time I wanted to enter into a trade, but after a while it just started clicking. You know what I mean? Always trade the front month, man. You cannot just trade on any NASDAQ chart like I used to do when I would get stopped out on my MT4, and then on TradingView I wasn't even stopped out. You cannot just trade on any NASDAQ chart, bro. Have you ever been trading a CFD and mark up your chart on TradingView, execute on MT5 and get stopped out on your phone on your MT5, but on TradingView your position should still be intact, or vice versa? That shit dead. Let me show you how to always check to make sure you're on the front month contract. Now let me also show y'all real quick. Do you see how on YM, which is Mr. Dow Jones, it has this H in front of it? You see how on NQ, which is NASDAQ, we have this H in front of it? Do you see how on ES, which is S&P, we have this H in front of it? This is the contract that we're trading for the month. Now let me go ahead and I'm gonna show y'all. For y'all to always just double check to make sure you're on the right contract for the time of the year, they rotate 4 times a year. You wanna go to cmegroup.com, right? And let's just say you're starting at the front page. You want to go to markets, and we're just going to use E-mini NASDAQ as an example. You're going to go right here, click E-mini NASDAQ, and once this loads up, you're going to click volume and OI, which is right here. Now you're going to scroll down and you want to choose the month that has the most volume. You don't want to trade a contract that got, I don't know what this is measured in, but 36 volume compared to 744,000 in volume. I don't know what it's measured in, but yeah, bro, obviously you're going to choose the March contract. Obviously it's right before March. Now when this contract ends, right, you want to always switch your contract. It's called roll over your contract. Update your contract 2 days before the expiration date. I heard somebody talking about, like, if you don't roll over your contract, let's say it's oil and you just end your contract for the rest of the year, then don't be surprised at the end of the year if you get barrels of oil sent to your house. Bro, that's not gonna happen, bro. People don't be knowing what they talking about. So yeah, man, now I want to show y'all. Oh yeah, you know what, let me just double back on this real quick. All right, I talked about the fees for Tradeovate. Now with Top Step, these are the set fees with Tradeovate and Top Step. For E-mini S&P, I'm going to pay about $4.28 per contract, and for E-mini NASDAQ, I'm going to pay about the same. For E-mini Russell, I've never traded this, but $4.28. If you're using a prop firm to trade futures, man, just make sure you check and you just know what you're paying in commissions. It's simulated commissions, and it's not like it comes out of the position. Like, let's say you go for a 1 to 3, you're risking 300 and you gain 900. It's not going to come out of your position. The 900 that you made, when you enter into the trade, it's going to subtract it from your account balance just right then and there. I guess it really don't matter, but yeah, that's how it go. So boom, I want to show y'all how to actually do this. Let me see if I can pull up a paper trading account. And you know what, while I'm right here, let me show y'all how to actually log in. Let's say you go get a Top Step account or a TradeVate account and you want to connect it to your TradingView. So boom, right? You want to go down here and you want to click this arrow, show panel, and look, these are all the brokers that you can use. Open an account. I use TradeVate. I'm going to click TradeVate. I don't know what that means. Look. We having live problems with TradeVate right now. I never seen this. Oh, you know what? This is the same problem that I had the last time. When you have TradeVate on your TradingView, you cannot log into like multiple tabs and have your TradeVate account connected to your TradingView. It has to be connected to one single like screen. I've had it connected on my computer and my phone, like I said in that example when I had to go take a dual key. You know what I mean? But other than that, bro, it's gonna give you problems if you try to log in on this computer and then go log in on the computer that you got in the other room. It's gonna give you issues. So you don't want to deal with that. All right, I promise you. So yeah, you click that and then you just put your login information in. On this account, I'm already logged in. I'm taking a challenge right now. I took an L for the day. Ain't no biggie, man. And let me see if I can do a practice count. Let's log out of here and just hop on paper trading real quick. All right, boom. I was fucking this paper trading account up, over leveraging like a mug, boy. But that's what you're supposed to do. That's what I'm gonna do. At least if I feel like I want to keep trading, I'm gonna just go on paper trading. I'm gonna just put however many contracts I want on there. So boom, right? This is the NASDAQ. Now let's say I wanted to take a sell right here, right? I'm going to left click on my mouse. I believe right click on my mouse. I'm going to click trade and I'm going to click create new order. Now you do have these market execution buttons up here, but the only thing is about these, I don't like using these because I guess it's not gonna let me do it. I guess we'll just back test. Like, let's just do this. I don't like, all right, it's not gonna let me click it, but I don't like clicking them because I can't figure out how to put a stop limit in there. Like I can't figure out how to put like a stop loss and a TP in there when I click that button. And I truthfully don't even know if you can. The only way that I truly know that you can do that is if you do what I'm about to show you, right? So what I do, and this execution is honestly faster than it usually is for me on MetaTrader. I right click this, press trade, create a new order, and let's say I'm going to take a sell. I'm going to take a sell. Wherever I right clicked right here, whatever price I right clicked, that's where it's going to put my limit. I'm just going to put my take profit and my stop loss. I'm not going to worry about typing in the exact numbers, simply because I can do this, right? Press sell. Why it's not popping up? Let's try it again. Maybe it's because it's a paper trading account and I'm trading live data. All right, so like I'm gonna just do this example again. I'm gonna go right here. Okay, TradingView, you pissing me off, man. You pissing me off. All right, so basically when you press trade and you set that limit into the market, it's going to pop up like this. It's going to pop up with a limit, and your stop loss is just going to be wherever they put it. Your TP is going to be wherever they put it, and you can literally just drag it to exactly where you want to put it. Now you don't want to just put that there. You want to actually go ahead and you want to put this on top of whatever. What's going on today? My computer done froze. You want to put this on top of where you're about to take your order. Why? Because this way you can figure out your risk management quicker. If I'm trading NASDAQ and I got a 10 pip stop loss, all right, I'm risking 200, but my risk management says I can risk up to 400. So I'm going to go ahead and I'm going to put 2 contracts on right here, and I'm a little bit above it, so I'm gonna just adjust it a little bit, and I'm gonna set my TP right here. The long position, short position projection tool is going to make it way easier and way quicker for you to know how many contracts you should be using. Now, if you want to take partials, right? If you want to take partials on this thing, I'm going to just go ahead and enter in just to show y'all. You have to enter in with more than one contract. You can't take partials on one contract, all right? You can only take partials on more than one contract. And how you do that is, I can set, when I'm live trading, I don't know if I can do it while I'm back testing, but when I'm live trading, I can go ahead and I can put in a limit order the same way that I put in the actual trade, by right clicking and then pressing trade and then putting in the limit order. Let's say I'm taking a sell, all right, then I got to put a buy wherever I want to take my partial at. And it's just like that. Wherever I want my full TP, I got to put another buy, because for you to sell a position, the market makers or whoever, they got to buy it back off you. If you're buying and you want to hit your TP, you're selling your position. Pretty simple, right? I hope I gave y'all a fair explanation and y'all have a fair understanding. Even if y'all don't get a fair explanation off of this video, there's tons of videos on YouTube that explain this, but there will be no video that will give you the insight that experience will give you. So go ahead and just like get a paper account or whatever you need to do, man, and just for a couple days just practice on futures. Just pay the little $7. It's a quarter a day, bro. I'm sure you can I'm sure you cough that up. You know what I mean? For the live data, you need that live data because it's highly precise. You won't have the problems that you have on CFDs. Your spread will be super low. Everything, bro, it's just so much better. The one thing that I don't like about futures, I'm going to show y'all real quick, is if let's say I wanted to get a Top Step account, right, which I do have one. If you were trading a CFD, odds are that your prop firm would say, okay, you have a 10% drawdown or 8% drawdown, and you got to hit 8% in the first phase of the challenge, right? Now, you would be risking 1% of this 50K, which would be about 500. Let's say you're going for 1 to 3, and every time you would gain 1,500, and that would be 3%. Now, on a futures prop firm, right? Your profit target is 6%, but your maximum loss is 4%. So if you were to risk 500, you would only you lose 4 trades and you're done for. You know what I mean? And the odds are that every time you get into a trade and you want to set your stop loss, unless you're setting a stop loss that is just absolute every single time, bro, how much you're risking is going to be slightly different. You have to really mitigate that and pay attention to it. So on my 50K account, I risk 300, because if I risk 300, that means I have to lose damn near 7 trades for my account, 7 trades in a row for me to blow my account. And that's fair enough to me. Now I go for 1 to 2.5s, 1 to 3s typically. So that means I'm going to come up at least 1% of this account every time I trade, every time I win a trade. You know what I mean? So it means I have to clear about 6 trades to win as well, to pass the challenge as well. So that is the one thing that I do find a little bit awkward. It's a little bit awkward to stance yourself in a futures prop firm when you're coming from a CFD prop firm, but you'll get the hang of it, bro. It's honestly just a move, and it's just a lot more convenient, and the pros and the cons honestly weigh themselves out, man. So yeah, bro, if y'all have any more questions about this, drop them in the comments. I'm gonna make sure I get to everybody. If I can't answer your question somehow, then there are so many different videos out there, and like I said, there will be no insight like proper experience. So just get you a little paper trading account and start practicing, man. That's the best way to do it. That's how I did it. That was how I understood the lot sizes and the risk management adjustment. It really is an adjustment, bro, but you'll catch on to it, man. That's about all I got, y'all. I'll be dropping another 2 videos this week, so stay tuned for them. I got another banger for y'all on the psychology series, and y'all keep your head on straight. Stay great, man. Peace.